Alrighty, hello. Welcome back to ASAP Finance.
We're here with another quality episode, guys.
Always.
You guys know by the title, Dangers of Options. It is not a good thing to be in. There's a lot better ways that you can put your money towards.
A
lot safer, yeah. Correct.
Safer and better.
So we're here to tell you why you guys should avoid options. It's not the smartest thing you can do with your money, especially in the long term, which is what investing is all about. It's all about long term, especially if you're young now. So we're ready to help you guys out, and we don't want you guys. Me and Sam, we've fallen for like the options, and we want to help you guys and clarify everything we've learned. Just to clarify. So, go ahead.
I was gonna say because for some reason, beginners are very attracted to options, but that is like the worst thing for beginners because it's the easiest way that you can lose your money doing in any any form of trading in the stock market. It's the easiest way you can lose your money, but it's the most attractive way to trade. But stay away from that. It's terrible, especially when you're first starting out. It's a terrible way to get started.
Right, and a lot of people got started during COVID,
especially recently. You know that the COVID-19 stock market crashed 50%, and retail investors just started piling in. And where did a lot of them go? They went straight to options.
Yeah. I mean, people are sitting at home and they're like, okay, what do I do? All bowling alleys closed, bars are closed. What do? You literally hop on, you download one of the biggest apps right now, Robinhood, which is just insane. And they're so bored at home and they're like, oh, let me just throw some $200. I've saved up money from college or my job, and let me just throw money in and see what happens, And people just blindly did that. And
it's honestly gambling. It feels like gambling.
It is gambling. You're exactly right.
Yeah, especially
and it's crazy. Like you look at the Robinhood app and you compare it to something like an older brokerage like Schwab or Ameritrade. The difference is astounding. Okay, you look at Robinhood, this nice green, vibrant colors. Just super simple. Like the entire thing is built to look like a game. Okay, and then you look at Schwab or something with your retirement accounts. And it's just crazy how attractive Robinhood is, and especially options in general. You go, you click some buttons. It tells you your possible profit, like how much profit you can make off an option and stuff like that. And it's just so attractive for young people, and that's why it's so easy to fall for.
Yeah, not a big fan of Robinhood at all. Especially, I mean, it's literally they have your score. The first thing you open your app, every time you open the app, it literally has the score of a chart, and you're literally, anytime you open that, you're just gonna think, oh, how can I build this? How can I get this higher? I want this to go up, and all the moon, going to the moon like a rocket ship. And Robinhood is not the best app to be smart trading on.
But then again, it's one that it's attractive for beginners because it's the easiest one. That's the one that I was told to get because it's the simplest one. It's the one that's gonna be more simplified for you, But then again, it's the most toxic. It's the most toxic interface.
It is addicting. I mean, Sam was saying, it's a game basically. Mm-hmm. That's how they treat it.
You're in a trade, and it's it's the same feeling you get that you get gambling your money.
Yep.
And it's you see that green, you're like, oh, and then all of a sudden it goes down. You're like, what's gonna happen next? What's gonna happen next? And it's just terrible.
Yeah, and I guess props to them because. The user interface and just how easy it is to use is honestly, it's pretty genius. And that's why it's exploded as much as it has. And it's just crazy.
Yeah, it is a beautiful platform. I do have to give them props for that. Yeah. I mean, whoever the CEO is, I don't know his name off the top of my head. Yeah, he's definitely sitting on a lot of cash right now. Yep. and they just went to 24-hour trading or whatever, so they're going to be making even more money. Their stock isn't doing too well, so sucks for them.
Speaking of Robinhood, I mean, another event that brought just tons and tons of retail traders was the whole meme stock craze.
Right.
That was wild, and a lot of it was taking place on Robinhood.
Right. Do you want to explain how that happened, the short squeeze? Because a lot of people see short squeeze, but they don't really know what it means. Yeah. You want to explain it for them?
And I mean, you kind of hear the term thrown around so much. Ever since then, people just throw it around randomly. The simple explanation is, just the same way you can buy a stock, you can short a stock. You can borrow shares, hoping that it goes down. And when a stock gets over borrowed, there's short pressure on it. And when a lot of investors or traders are buying the stock, that'll force the the people who have shorted it to buy back their shares, which pushes it higher, and then it just starts a whole little cycle of people just buying back their shares and more people buying and buying, and it just pushes higher.
That's how GME gets to $500 when it was like going bankrupt. Like
93% borrowed, like an insane borrow fee, and it just exploded. And then, it goes all over the news, all over the media, and just people are just piling in, oh my gosh, and a way to make money.
And they don't even know anything about the stock.
Yeah, they know nothing. They download Robinhood. They buy GME, AMC. They wait for more news, and then
I mean, Robinhood literally makes it so easy. You could see the news, and you're like, oh, what app do I download? You go to the app store. Robinhood's at the top. Yep. You download that. You're like, oh, this looks super easy and simple, and you just do it in 5 minutes, and you throw money at AMC and then or GME or whatever, a bunch of BUI. There was a bunch of meme stocks that people could throw their money at that were just squeezing, hoping to be the next GME or AMC.
Yo, I want to talk about that for a second. Like the Robinhood news that you see, like when you buy a stock or like sell a stock or you're in, it has like newsletters for that certain thing, and especially like when I did options, I would look on these like newsletters. It was terrible because I would trade based off of these. I don't know where they're getting these news sources, if they're credible. Like they just pop them on there, but it like influences me to make a trade, or even though like it does nothing, it doesn't really react. It's not a
and that's the thing. Like, and I'm sure they are probably credible, but the thing is, like how old are they? That's the real question. Is they're probably so outdated, which I that might sound like I'm talking like weeks, but like in a stock, like all that matters is like hours, and so it's not really relevant, and it's just another way to just trap you.
It gamifies it. It gamifies
it. Literally.
And then Reddit too just fed this whole thing as well. Gosh. Like you literally hop on Reddit and there was people. I mean, it was like thousands of people spamming like AMC to the moon, GME to the moon, and they were just spamming these things. And like people just see that online. They're hopping on Reddit and they don't. This is kind of funny actually. I was tutoring someone and he was in high school. I think he was a junior in high school, and I get to his house. I was tutoring him math. And on his computer screen, he's looking at he's looking at GME, and this was when it was like an insane day. It was like 100,000. It was like 100%. And I sort of just got started into investing, and I was like, you looking at GME? I was like, did you buy some of that? He's like, nah, I didn't buy any. It's just so funny. I was like, you're a smart man for that. If you're listening to this, dude, I forget his name. But if you're listening to this, you're smart for not buying any. But yeah, people just see something on Reddit and they just blindly bought it. It was awful. Yeah,
it was wild too, because like even during the COVID crash, when a lot of people were getting drawn into this, like Wall Street Bets, which was like the flagship like degenerate trading Reddit page, it was so small. Like during the initial crash, it was super small, like thousands of members, and then it got pretty big. And before the meme stock thing happened, it was like a few 100,000 members. And it just exploded. Right. It was like instantly just went to like millions and millions and millions. Right. And it was so big that the Discord crashed. And I was in the Discord, and people would be in voice chat the whole day just saying like, don't sell, hold it. And someone would be like, oh, I just sold, and they just get absolutely battered.
Bullied out of the No, but yeah, also this is even you shouldn't be hopping into this either way. There were people that were just buying shares of AMC. We're talking about options and how dangerous options are, but shares can even be dangerous if you're hopping into things like this that you don't know anything. I'm sure there were majority, at least probably 90% of the people didn't know what a short float were that were buying AMC and GME.
What's a short float? What's a short float?
I mean, real quick though, but beyond that, there were people who had never bought a stock before in their whole life. They don't even know how the stock market works, and they're over here buying a company they know nothing about. Just because it's all over the news.
Exactly.
And we know how that ended. I mean, all those, most of them are down like 70, 80% from their highs. And the whole way down, people were saying, oh, the biggest squeeze is yet to come, or just wait, it's going to go way higher. And look at that. Never did.
Imagine the people that bought options that expired in 2 weeks, and then it just went right down, and they lost all their money.
Oh,
it's just why options is even more riskier than buying. Because at least if you buy a share, I mean, you're still gonna have something, and you'll be able to hold it. Maybe, hopefully, it probably won't.
And it doesn't expire.
It doesn't expire, exactly. That's something why options are so dangerous. Every option you buy is gonna expire at some point. So people were just doing that, and then there's people sending screenshots online, like you were saying, like
you would just open Reddit, just be like people, because it was only going up and so many people were in it. All you would see is just ridiculous gains, and it would just draw more people in. But then it popped, everything started going down, and just for months and months, and you still see it. It's just people who put their entire life savings into like GME, AMC, whatever, down like 99% on like, especially if they had options contracts, like to zero. Everything gone. They're like, oh this was my parents' money, this was my mortgage money, my college savings gone.
Things not to do. No, and another point is like all these people saw these screenshots and like it's super misleading because like you don't know, like they could take a screenshot of like their gains or whatever and you don't actually know if they sold it or they made the money or it could be fake. They could just be faking someone out and being like just a troll online, buy this, I just made $10,000 off of it or whatever, and you don't know that the people behind the screen, you don't know how smart they actually are, you don't know if they actually made money off of it, and like that's why you shouldn't trust anything you see like on social media or Reddit or something because it's so misleading.
That's like one of the hardest things, is because like you see all these people on social media who have like a big following maybe, or just they're showing like these big gains, and you think like, oh, this has got to be like an experienced person. And you just instantly listen to them because like that's what you want to hear. It's like, oh, they're saying this will make me money, it'll make me money, and you listen to them. You don't know nothing about this person. For all you know, they're just as new to it as you are, and then boom, doesn't work out.
Then you lose all your money.
Yep.
That's why options are not smart. That's why you should do your own research. Like don't buy options. Do your own research on a company first, and don't blindly buy things, whether it's stocks or options.
Yeah.
And for every like screenshot of a gain that you see, I want you to look at a screenshot of a loss because there's probably more losses out there than gains overall. But you only see people only want to show you the gains,
I would not say probably. I'd say definitely.
Definitely, yeah. But so don't only hear the good.
Yeah. And a lot of it's like psychological too. Like even if you are like getting the options and you're just taking these big losses, and you see your account down like 60%. You look at that and you're like, so say you start like $1,000 and you already lost $400 or $600, and you look at that and you're like, oh my gosh, I need to get back to where I started, and you just start making these crazy, like even more dumb, wild, just trying to make all your money back, and it just takes you to zero even faster.
Yeah, that's the worst because you think that you're gonna make it back so fast because you lost it so fast.
Yeah.
But
that's not how it works.
It's 10 times harder gaining money from options than it is losing money from options. You can literally buy an option blindly. You probably buy a random out of the money call and you're probably gonna lose it. Like by the end, like if you just keep making those choices, you're not gonna be successful in options, which is why you should avoid those and stick to stocks long term because you're not going to be able to get that $400 back. It's just going to keep going down, like you said.
Because you need to do your research. You need to, like, I remember when I was first starting out, I used to just, like, I bought an option just randomly. Like, I didn't do any research. I didn't even see the price if it was up or down a lot. No, I just bought it. I mean, and it printed. It printed for me. And I was like, shit, why did it print? Like, okay, options are cool, I guess. And then I tried it again. And then, okay, maybe I made a little bit more. And then I tried it again. And then I lost just as much as I made. And then it just goes downhill from there if you don't do your research and everything. So that's
you didn't do any research. That's the whole,
that's the point.
And you should avoid options like in general. Like you shouldn't
entirely.
Yeah.
Like
if you are anywhere close to new to the stock market investing, you should be staying like completely far away. You need to have an understanding of the stock market. You need to have like some money invested like in a safe retirement account, and then like that's what you should be focusing on. You should be learning and you should be investing for the long run.
Right.
Like you shouldn't be trying to get the get rich quick options.
Yeah, don't do what I did. Did you guys do the same thing when you first started out?
Oh, of course.
Yeah.
everyone falls for that. That's why you should just avoid it. And it's literally like, I mean, if someone's telling you like to avoid options, they're probably telling the truth, and they've probably made their own mistakes in their life.
That's the thing. Like you hear that, and you're like, oh, like they're just saying that they're trying to like look out for me, like they are, and like you hear that, and you're like, oh, it'll be different. Like oh, I'll have better luck.
I'll be the one that makes $1 million in 1 year off options. No, you're not.
God. I'll be the one outlier on planet Earth. And like it's crazy because like your odds of like going to a slot machine are probably better than trying to trade options. And at least if you're going to a slot machine, you're like taking the money out of your bank, and you're like okay, this is as much money as I'm willing to lose. With options, it's just as quick as, especially on Robinhood, you go to a button, you click transfer out of bank to Robinhood, boom, you're like, oh crap, I lost all that money. Okay, let me go transfer some more.
Yeah,
it's instant.
Another reason to stay off Robinhood is because of the instant, like it's your money settles instantly. So like if you sell a stock or you instantly deposit money, you can instantly buy something. But unlike other brokers, like the one I use, TD Ameritrade, there's a gap that your money has to settle. So it's not as much as like, oh crap, I just lost it, I got to put it back in. So like that's why you should just avoid Robinhood. I mean, a lot of people that are listening to this probably do have Robinhood. I mean, it's a good app to use. Like it's very, like if you're just looking at stocks, but I would avoid buying or selling on Robinhood at anything. Just open another brokerage at like the ones we said in the Roth IRA episode. Those are all good options.
Yeah, of course. And like in that, like even if like you are like getting into investing and you're like learning about the stock market and you're setting up those retirement accounts, like that's the way that you'll get that compound interest.
Right.
In trading options, it's not. It's just you're gonna end up losing that initial capital and it's gonna be a tough time.
Yeah. You might zigzag back and forth, maybe go up a little bit, maybe go down a little bit, and think like, oh, I'm learning something. In the short run, you're not. Like
personal experience, me to you, I'm telling you, it will seem great, and then it will be like, wow, all gone. Wow, that's unfortunate. I probably should have started with the smart stuff.
Right. And what is the smart stuff? Y'all are probably wondering. Listen, if you guys really like options, there's a lot. I mean, it's easy to like throw money in and just like it's super simple to be lazy. But a way better option for you to like if you don't want to put a lot of time into it and you just want to like play with money or buy random stuff, literally just buy ETFs. Buy ETFs and mutual funds.
What are those? What are those? ETFs and mutual funds.
Check out our Roth IRA episode. Danny's always lacking. I guess he just forgets everything that happened in the Roth IRA.
I'm asking it for the audience.
You want to explain for them?
Okay. ETFs are basically it's like a bundle of a bunch of stocks that you could buy, and then it has a bunch of. So overall, they're gonna do like 10% a year, 10% compound interest a year. It depends. Yeah, it depends. Depends on. Sometimes they lose it, sometimes they gain. But ETFs are more of like a safer route to put your money in.
Perfect.
Right? Yeah. Instead of investing in one specific stock, you're going to buy a group of stocks that will hopefully you just literally buy, and they're active. Most ETFs are actively managed. So like if a company is going bankrupt or something, they're going to get rid of that stock for you. You don't have to think about like if the company is good or not. So it's an easy way for just buy ETFs, buy VU. Literally VU is the best thing in the world. If you only bought VU in your Roth IRA, you'd be chilling. Like not even joking. Like it's insane.
That's a technology one, right?
VU is just the S&P 500.
Fortune 500 companies.
Okay.
And that's that's the big thing is like time. Another thing, if you are trying to trade options, it just requires so much time. You have to be like watching, like whatever means you think you have behind whatever thing you're trying to do. You have to be like looking into it, and then if you invest, you just invest and you let it sit and you let it compound, and then that's that. Like it's so much more advantageous to do the smart thing and invest and learn,
right,
than to go the gambling route.
Yeah, that's facts. Because money does not come easy. Unless you win like the lottery, but the lottery is not easy, so it's just money doesn't come easy.
Mean, you bring up a good point. Like he was talking about with gambling, like you're probably better off like buying a lottery ticket, a scratch off or something. Yeah. Get your adrenaline buzz for $5 or $1, compared to playing options and just watching Robinhood go up and down, and maybe you might make $20 or something. You know, exactly. It's better just to avoid options altogether. You're not gonna get rich off of options. It's bare minimum of society gets rich off of options.
And like it's important to remember, like some people might think like, oh, but like there's $1 billion hedge fund managers or so that trade options. These are people who have spent their entire lives in the stock market investing, learning, and only after decades are they actually like messing around with just big bundles of money doing like completely different kind of options than what Robinhood tries to get you to do.
Right. They know the economy, like they study how everything works, how the Fed works, and how money supply works, and they figured it out over time. They didn't just hop right into options on Robinhood. They learned. They didn't have Robinhood back then, probably when experienced people now they were trading freaking notes or whatever on the stock,
taking it to the broker.
Yeah, really. That's really honestly the safest time to invest, man.
Really.
If you have to make a drive to a broker's office,
too many trades, and
you're gonna be like, oh shoot, okay, let me think about what stock I have to buy, and you're gonna like do some research, and then you might almost leave. You might double check yourself because you're gonna be like, oh shoot, what about this? You know,
that's like a good philosophy. Is every trade you make, I want you to think, would this be worth walking all the way to the broker to hand them this, or would it not be? You know, and then like you'll be like, wow, maybe this isn't smart. Maybe I should give this another look.
That's a great point. I'm gonna start asking myself that anytime I buy some stock.
I think we need to move to the middle of nowhere where like no cell reception whatsoever, and they still have like an old physical broker, and then maybe like that might actually help.
It might. No, shoot, maybe. If y'all are having trouble, if y'all are addicted to options right now, go out and get away from society and find yourself a broker. No, those probably don't exist. But yeah, hopefully you guys understand how dangerous options are. Do you understand, Danny, now? After
I
the mistakes you
understand.
made?
Yeah, I learned the hard way, but hopefully you guys can learn the easy way and just listen to us.
Right. Listen, people, we're trying to help you guys. If you guys listen to this, we're trying to help you. Just trust us. Like,
we've all learned the hard way.
Yeah.
We're just trying to help.
If you don't trust us, ask someone that's at a financial, like at a bank or something, and ask them. Be like, is it smart to trade options at 20 years old? Is that when I don't know anything about the market? They're not going to tell you that it's smart. So just avoid those. Stick to Roth IRA. Check out our episode if you haven't listened to that. It's a banger.
Absolute amazing gem of information.
But yeah,
I agree.
Well, thank you for watching.
Yeah, I think that was pretty solid.
That was a great episode.
No financial advice. None of that was financial advice.
It was not. What you do buy, you can lose, especially in options. So do your own research.
We may have positions in some of the securities that we mentioned.
That's true.
And I guess